studying your last two. I swim med when turned in. The staring down to mute. And can learn the pole that sunk he died.
Modern accounting software has transformed the way corporations prepare their financial information for tax reporting. Instead of maintaining paper records or manually preparing financial statements, businesses can now record transactions electronically throughout the year. This not only improves efficiency, but also provides the organized financial data needed to prepare GIFI schedules quickly and accurately. The process begins with daily bookkeeping. Every invoice, sales receipt, expense, bank transaction, payroll entry, and other business activity is entered into the accounting system. As each transaction is recorded, the software automatically posts it to the appropriate accounts in the general ledger, eliminating much of the manual work traditionally required. Because all financial information is organized continuously, the accounting software can generate key financial reports with just a few clicks. At the end of the reporting period, it prepares the balance sheet and income statement directly from the accounting records. These reports form the foundation for completing the GIFI schedules required for the T2 corporate income tax return. Having accurate and well-organized bookkeeping makes GIFI preparation significantly faster. Instead of manually gathering financial information from multiple sources, accountants can work from reliable financial statements that have already been generated by the accounting software. This reduces duplication of work and minimizes the risk of data entry errors. It's important to remember, however, that accounting software organizes financial data. It does not determine tax treatment or replace professional judgment. The financial statements still need to be reviewed. Account classifications should be verified, and the information must be properly mapped into the appropriate GIFI categories before being included in the T2 return. The key takeaway is that good bookkeeping is the foundation of efficient GIFI reporting. By recording transactions accurately throughout the year and maintaining organized accounting records, accounting software enables corporations to generate reliable financial statements quickly, making the preparation of GIFI schedules faster, more accurate, and much more efficient. Accounting software and tax software work together to create an efficient and accurate corporate tax preparation process. Instead of manually entering financial information into tax forms, modern software allows much of the information to flow automatically from the accounting records to the T2 corporate income tax return. The process begins with the accounting software, where all daily business transactions are recorded throughout the year. Sales, purchases, payroll, banking transactions, and other financial activities are automatically posted to the general ledger and organized according to the corporation's chart of accounts. At the end of the reporting period, the accounting software generates the corporation's financial statements, including the balance sheet and income statement. These reports summarize the financial position and operating results of the business and serve as the foundation for corporate tax reporting. The next step is GIFI mapping. During this stage, the financial statement accounts are matched to the appropriate standardized GIFI categories required by the Canada Revenue Agency. Although the corporation's accounting system may use its own account names, the mapping process converts those accounts into the common reporting language used for the T2 return. Once the GIFI information has been prepared, it is transferred into professional tax software. The tax software imports the financial data, validates the information, performs error checks, prepares the required GIFI schedules, and automatically transfers the information to the appropriate sections of the T2 corporate income tax return. The completed return includes schedules such as Schedule 100, Schedule 125, Schedule 141, and Schedule 101 when required. After a final review by the tax preparer, the return is submitted electronically to the Canada Revenue Agency. One of the greatest advantages of this integrated workflow is that it significantly reduces manual data entry. Because financial information is transferred electronically between accounting and tax software, the chances of typing errors are reduced, preparation time is shortened, and reporting becomes more consistent and reliable. The key takeaway is that accounting software and tax software complement each other throughout the corporate tax preparation process. Accounting software organizes and produces accurate financial information, while tax software converts that information into standardized GIFI schedules and prepares the T2 return. Together, they streamline the entire filing process, improve efficiency, and help ensure accurate corporate tax reporting. Accounting software is an incredibly powerful tool for preparing GIFI schedules, but it is important to remember that software is only as good as the information entered into it. While automation can save a significant amount of time and reduce manual work, accurate bookkeeping and professional judgment remain essential throughout the corporate tax preparation process. One of the most important best practices is to maintain accurate bookkeeping throughout the year. Every business transaction should be recorded completely, correctly, and on time. When the accounting records are accurate, the financial statements generated by the software will also be reliable, making GIFI preparation much easier. Another key practice is to review account classifications carefully. Although accounting software automatically organizes transactions, it cannot always determine whether every account has been classified correctly. Tax preparers should verify that assets, liabilities, revenue, and expense accounts have been recorded in the appropriate categories before they are mapped to GIFI. Using updated accounting and tax software is equally important. Software vendors regularly release updates to reflect changes in tax legislation, CRA reporting requirements, and electronic filing standards. Keeping your software current helps ensure compatibility with the latest GIFI schedules and reduces the likelihood of filing errors. Before transferring financial information into the T2 return, always verify the GIFI mapping. Review how each account has been assigned to its corresponding GIFI category and confirm that the mapping accurately reflects the corporation's financial statements. This simple review can prevent many common reporting mistakes. A final review before filing is another essential step. Compare the financial statements, GIFI schedules, and T2 return to ensure that all information is complete, consistent, and accurate. Even though software performs many automated calculations and validations, it cannot replace the professional judgment of the accountant or tax preparer. There are also several common mistakes to avoid: poor bookkeeping, incorrect account mapping, outdated software, skipping the final review, and relying entirely on automation without verification can all lead to reporting errors and unnecessary complications during filing. The key takeaway is that accounting software is a valuable assistant, not a replacement for professional expertise. It greatly speeds up the preparation of GIFI schedules and improves efficiency. But accurate bookkeeping, careful review, proper account classification, and sound professional judgment remain the foundation of preparing a complete and accurate T2 corporate income tax return.